evening, I'm Liyana Hassanel. Welcome to Bizworld. Malaysia's inflation rate is able to be maintained at a low level due to subsidies and price control. Minister in the Prime Minister's Department for Economy, Datuk Sri Mustafa Mohamad said, although the rate is expected to be slightly higher in April from 2.2% in March, it is still seen as low and manageable for the government compared to the inflation rate in the US and UK, which are above 8%.
Jadi negara kita ni oleh kerana sebahagian besar daripada makanan itu ada subsidi. Umpamanya lah kita ada subsidi untuk minyak masak, kita ada subsidi untuk gas, ya. Kita bayar gas ni cuma kalau tong yang 14 kilogram itu cuma RM26. Kosnya lebih RM50. Jadi dia lain subsidi lah.
He said that after witnessing a partnership between AirAsia Academy and MyDigital to enhance Digital Industrial Revolution 4.0 for IR-related upskilling for the locals. The government encourages public-private partnerships such as this to improve employability and career advancement prospects, as well as enhancing capability to use, develop, design and innovate for IR technology solutions. Malaysia will be among the economies that win big from the high commodity prices and will pay less of a price on the inflation side, as it exports several times of its domestic production. Moody's Analytics report noted that Malaysia, Colombia, Indonesia and Saudi Arabia were among the few economies that would benefit from the high commodity prices. Indonesia and Malaysia would benefit from the price of palm oil, which has surged, following severe global shortages of Russia and Ukraine-produced sunflower oil. The firm also noted that across the rest of the emerging world, inflation is pushing higher and central banks are not going to give up until it is tamed. Central banks have snapped into action, with bank governors in the Philippines and Malaysia raising rates, while Indonesia and Thailand will be next. The surge in international passenger movements at local airports on the back of higher demand with airlines actively resuming international flights routes indicates a promising prospect for the aviation industry to recover faster. Bank Islam Malaysia Chief Economist Muhammad Afzal Nizam Abdul Rashid said the total passenger traffic in the first 2 months of this year grew substantially by 390% from the same period last year to 5.29 million passengers. This was mainly underpinned by domestic passenger traffic, which recorded a big jump of 420% to 4.74 million passengers, while international passengers rose by 224% to 541,000 passengers during January to February this year. He also noted that the industry is on track to record further improvement as restrictions on international borders had been lifted in April. Research firms are in agreement with the Malaysian Automotive Association, or MAA's total industry volume (TIV) target of 600,000 units for the automotive sector. MIDF Research said it expects to see a buoyant recovery in car sales due to the resumption of economic activities. Other factors include the 100% sales tax exemption on completely knocked down passenger vehicles and the 50% sales tax exemption on completely built up cars until the end of June. Meanwhile, Kenanga Research remained positive on the auto sector, underpinned by strong outstanding bookings, accommodative interest rates, and gradually improving employment and household income condition. According to MAA, Malaysia recorded new vehicle sales of 56,213 units in April, down 3.63% from April last year, due to the shortage of chips and components. It added that the TIV for April was 23% lower than previous month, which was at 73,222 units. The first quarter of financial year 2022 results of Telekom Malaysia Berhad are expected to be seasonally weaker, with revenue likely down by some 6% to 19% quarter-on-quarter. However, RHB Research said the telecommunications company remained its preferred sector pick. Its stronger revenue and earnings outlook remain intact and is expected more operating expenditure savings going into financial year 2023. The optimization of its office space will also see TM shifting most of its operations from Menara TM to TM Annex and Cyberjaya by year-end. This could translate to about 100 million ringgit savings in rental and utility costs per year, with additional procurement savings and lower staff cost from manpower optimization. That's all the time we have for Bizworld. I'm Liyana Hassanel. Thank you for watching and thank you for tuning in.